afternoon. How are we all doing? Happy afternoon on a Friday, isn't it? Afternoon was check. Mark, Paul, Marco, how are we doing? Yeah, it's Friday afternoon. Finally, weekend. Right, so we're going to have a quick look through what's been happening this week. We went through most of it this morning, basically, in the live room. Afternoon, Marco even. Another Marco. We've got two Marcos now. Two Marcos. And Mumo. Hello. So yeah, we went through most of it this morning in the live room as to what's going on. But today we've just had the Canadian unemployment come out this afternoon, which is up. So we were forecasting a 6.8 off a 6.7, and we got given a 6.9. So unemployment going the wrong way in Canada, which is not really a surprise with the tariffs and stuff. Wrong terminal. So I was just doing some testing on something there. I'll get rid of that. So yeah, if we look at the Canadian dollar, if we look at the US dollar CAD, very little movement on that news. The market really not interested too much in anything to do with the employment at the moment, because it's kind of a given with what's going on with tariffs that unemployment is going to go up. So obviously a slight downward tick in the Canadian dollar, so everything rallying against the CAD, but it's only the last couple of hours, so it's not a massive amount of price action. As you can see, that's really all we've got. So, you know, no ADRs. Why is that not updating? Okay. So yeah, no ADRs today at all. Really flat market. We went through the weeklies this morning, so there are some weekly opportunities, but again, they're not great. So it's a bit of a weird sort of week. Look, I mean, that kind of sums it up, doesn't it? This week, just dead. Absolutely dead at the moment. Market is in shock still, waiting for something to happen with tariffs. Let's just have a quick look at the open, what's going on at the open. So first 5 minutes are in. No trades on anything this afternoon. So one bar range is in, which is the 5 minute range for me. All too small at the moment. So hopefully we'll get a little bit more movement on this next 5 minute candle, and then we can get some trades off there. This morning was a nightmare as well. Look at the DAX and the FTSE this morning. Breakout strategy. No breakout. So here was the open. That was the 30 minute range and also the 10 minute range. So that was your 10, 15 and 30 minute range. And it's pretty much your range all day. So got triggered on a long, stopped out within about half an hour, triggered on the short, stopped out an hour later. So hour and a half, literally nowhere. And the last hour and a half, we're still back inside that range. So absolute waste of time this morning. The DAX, no movement at all. FTSE, virtually the same. So that was the 5 minute range. Really nice big 5 minute range today. So immediately short, stopped out, flip long, stopped out. If you'd have flipped short, stopped out. If you'd have flipped long, stopped out. If you'd have flipped short, you know, just can't do anything with it. It's a range bound day. So anybody that's literally selling highs, buying lows today, good job. But breakout strategy is useless. So no momentum at all so far. So hopefully we get a little bit of movement off of the US session. I mean, it's ticking a lot, but not really directional either, is it? So we'll see. We'll come back to that in a minute. But yeah, so there's your unemployment. Obviously, this week we've had the pound interest rate drop, and there is more drops forecast. Afternoon, Peter. And we had the Fed rate, which obviously has remained the same. Trump came out swinging, basically calling Powell all sorts of names and saying he was useless, he's too slow, blah, 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 blah. So usual stuff. Let's pretend we're not at school and treat people with respect. And, you know, he is the head of the Fed. He's not an idiot. He knows what he's doing. but obviously Trump's better than everybody. So anyway, so yeah, nothing much else happening today. We had the tariffs arranged, or the agreement for the UK and the US signed yesterday. So that's all good. So that's the first step towards undoing some of these tariffs. This was said this morning, 80% tariff on China seems about right. China tariff will be decided by Besant. So the market had a little bit of a whipsaw off the back of that. Nothing exciting. If you look at the S&P, that was there. So that was your nonsense, buy the rumor, sell the news within 10 minutes. Didn't happen, did it? So, yeah, nothing exciting has happened today at all since this morning's session. So, yeah, we're just waiting for something to occur. But just looking through FX, I went through this again this morning, but I'm just getting in and out on ADRs at the moment. So literally getting in, waiting for an ADR worth of movement and getting out and just playing the ranges, because that's all this market is doing. It's not good for anything but range trading at the moment. It's not moving. There's nothing you can do with it. So I'm just grabbing an ADR of movement out of stuff. Yeah. So the only thing I've got on at the moment, which I've actually managed to build a position size on, is Aussie New Zealand. So I've got 3 shorts on that. Fourth one is going to go in possibly today. We might make it above there, but I'm not holding out hope on a Friday, which is this previous support stroke resistance, which is the monthly level. So I'm looking for a push up and rejection out of there for the 4th position to get me in to an average around about there, and then push back into propulsion for an exit. But everything else, as you can see, straight in, straight out within not too long at all, but just range bound. So this Swiss yen I got into yesterday, had 2 trades on this week, or in the last sort of week and a bit. Shorted the RSI extension, out with 1 ADR, longed the RSI extension, out with 1 ADR, shorted, didn't quite get to it, but I just like shorting it from there to come down into this propulsion. So yeah, that's all you can do. It's just terrible. Sideways, absolutely sideways, everything. Which is not bad, because it means that all we're doing is getting singles on, but singles don't make a lot of money. So with position trading, you want to try and get 2 or 3 entries into a position, because then you've got a decent lot size when the move happens. But at the minute, it's just up, down, up, down. David, afternoon. Who's the best? Lee's the best. Happy Friday. Like it. Thank you, David. Very much appreciated for the $10. Thank you very much. It's always good for Friday. I can go out and have a beer tonight. 1 beer, because that's pretty much what a beer costs in the UK now. I'm not joking. 90% of it's tax. And our bins haven't been collected this week either. So, what am I paying my tax for? I don't know. Oil, obviously, we looked at this earlier this week. Still fancy this down. We looked at it on Wednesday. I kind of like this as a continuation pattern to the downside. I think we're going to pull back on this leg and potentially put another downward move back down to $50 a barrel, but I'm too scared to press the button on it. I haven't traded oil for a while, and last time I did it kicked me in the butt. So I'm not going to take it. I'm watching it, I'm forecasting it, but I'm not really actually getting in it. So, but yeah, everything else, as you can see, this week, just sitting around. So we seem to just be moving on news and then coming back to where we were, moving on news, coming back to where we were. There is a slight trend forming on stuff, which is lovely to get into. As you can see on the Aussie yen and the Swiss yen, I've been getting in and out, in and out, in and out. But it's taking days to get single positions on and off, which is just annoying. Yeah, CAD Swiss, absolutely sideways. Last 2 weeks. Can't really do much with it. No RSI extensions apart from Aussie New Zealand, which I'm already in. Pound New Zealand, which is very much the same thing. 4-hour RSI. So again, good short opportunity on that one. But there's not a lot else out there to look at today. So all a bit rubbish. Right, so let's have a look at where we are on the 10-minute ranges. 10-minute ranges, still too tight. Let's have a quick look at the NASDAQ. Yeah, quite a tight session today. So it doesn't look like I'm going to get any trades on the 15-minute ranges. Going to need to go some in the next 2 minutes. Mind you, it's having a go. I've got a bit of volume coming in. See if something's happened in the news. Wow. On Wednesday, really? More than 100 planes of Pakistan and India took part in a 1-hour air battle on Wednesday. I've been watching the news. Surely that would have been reported on the news if there was 100 planes fighting over India and Pakistan. That's 2 days ago. I haven't seen anything about that. Surely that's quite an important escalation. 100 planes fighting in the air. I don't know. Anybody else seen that? I haven't seen that. Weird. Anyway. Right, it looks like we might actually get a 3-bar range here. 1270. Oh, it's still not quite big enough. So I'm operating at the moment on 15% of ADR as a range, just because we are quite contracted at the opens at the moment. So I'm just trying to get more trades on. Actually, this does look like it's going to trigger now. That's good. Okay, so good chance we're going to trigger on these in the next 10 seconds. So 15-minute ranges look good. Not on the NASDAQ, though. But Dow and S&P will probably trigger. Let's watch those. There we go. So 15-minute ranges are in. We are selling direct into propulsion, though. So let's hope that propulsion gap doesn't hold from pre-market. So this high, that's your high of that whipsaw on that China announcement, and that's the low. So for a downside target, obviously that would be your most logical spot to the downside to go for. Because we have reacted up at that high. So if we're just going to sit in rotation today, and i.e. we're not going to go anywhere, we're probably going to come down and test either there or there, pull straight back up inside. If it's going to be like this morning, it's going to be one of those losing days, unfortunately, but we'll see. So we'll see where we go to the downside, if we go to the downside. But yeah, pretty much just about a 15% range. So there's your 15 range. That's what we've done. There's your 15 range. We've just clipped it. Look, so that you can tell by the stop losses, because my stop losses are also set at 15% of ADR. So that is basically, we just about made it into those 15-minute ranges. So these are very, very tight, a bit tighter than I like personally, but we'll see what happens. NASDAQ, no trade. So looking for the 30-minute range on the NASDAQ. We're 5865. We've done 5787. Well, that little wick we've just put in there is now 5940. So we will be taking a 30-minute range break on the NASDAQ. As a minimum, it will trigger on that. If we just sit around for the next 15 minutes, we'll get a break on the NAS as well. This just looks whippy today, though. Whippy Friday. There's a lot of volume coming in. You can see because it's flicking around a lot. There's a lot of volume coming into the market today, but doesn't seem particularly directional at the moment. Anybody got any FX pairs they want to look at specifically? Let me know. We can go through the FX side of things. Euro Swiss, I've got on at the moment. I'm looking to take off potentially. So got into that yesterday, day before yesterday, end of day. So we're retesting these lows from that break. We did hit propulsion and sell straight out of propulsion, and then we bought back out of that propulsion gap. We've invalidated that now, so there's a good chance we're going to push up into ADR today. So TP for me on this is 1 ADR. which is 62. So if we test ADR today, and i.e. test that propulsion gap, that'll be my exit. In fact, I think I'm going to put a manual TP on it, just there, just in case we basically push up and we reject and they sell out of that. Often you'll find with propulsion gaps, they fill 50%. So what I don't want to do is hit that, the EA not trigger an exit and not get out. So I'm just going to put a manual exit there, which is basically an ADR. Pound CAD. What do you do with that? So last 2 weeks, obviously that's last week high low. That's the 2 week high low. So yeah, I mean, you're bang in the middle of the last 2 weeks high low range. So you're in an expanding wedge at the moment, which is an expansion pattern. So it could go either way. So often with these, when you're in an expanding wedge, you will come back up and test the highs. So it's likely that we will test last week's high, last month's high, which is also that previous high from there. So you're looking at an area somewhere up here, resistance. So 150 ADR to the upside. Downside, obviously, we're probably going to come back down into this area here. So it will either take off or it'll just keep expanding usually, but difficult. Sideways, isn't it? So at the minute you're bang in the middle of a range, RSI's in the middle. If you are short from there, I mean, if you were long from down here, you're probably out. If you're in, that would have been a tricky entry because it's parabolic. Oh, sorry, no, it's that one. Yeah, so yeah, you probably would have got in on 5-minute reversal alert in there, or 3-bar reversal, or MA cross, or whatever in there. It's just sideways, isn't it? It's not going anywhere. Nothing's going anywhere at the minute. It's just dire. This week has been awful. I say it's been awful. I mean, I've got virtually no drawdown, and I've banked nearly 1.5%. So it's not terrible, but it is a little bit like pulling teeth at the moment, trying to get some movement. So you just have to be in and out fast at the moment. Not enough movement. US dollar Swiss. Just quickly. We're not on the Dow, are we? Okay, so Dow now breaking to the downside. So we're through that propulsion gap, which is good. I will come back to that US dollar Swiss in a sec. I'm just going to pull that partial up slightly. We've got these highs here, which we've retested. Very uneven support and resistance, but it's sort of from there and there. We've got an area which we keep retesting. And then this area here, which we keep retesting as well. So I'm kind of sticking my partial in the middle of there in case that holds. If it doesn't hold, we're going to come down and test propulsion down here. But this is that, you know, the big gap up kind of movement that we had. That was on a earnings announcement. So that would be my downside target today, properly. But partial there, that's an ADR. So ADR is all the way down here. My target is always 1 ADR, the runner. So we got so much room to go today, potentially. But We're not really motoring, are we, at the minute? Let me just quickly adjust the Dow as well. S&P. S&P's all right. Let's move up slightly. Just because I've got to close below that line. Come back to that in 5 minutes or so. Breaking down nicely now. Right, US dollar Swiss. What am I doing? Wrong one. So US dollar Swiss, again, absolutely sideways. There's nothing you can do with this. At the minute, it's just dead. So this is your last week, high-low. So this week, we tested last week's low. We bounced out of it. Reversal alert went in, came back, retested the propulsion gap twice. Off, we bounced out the highs. So it's a short right now. Beautiful short. So there's your M pattern reversal. It's actually a head and shoulders playing out. Hasn't broken the neckline properly yet, but pushed down into propulsion. Always assume if you're in a range like this, you have to just assume that it's going to keep range bound until it has a reason not to be range bound. So this is how range trading works. Once you get a high and a low established, when you get back to that high, assume that it's going to respect the high. Yeah. And just keep assuming it's going to respect the highs and the lows until it proves you wrong. When it proves you wrong, you stop out or you flip the other way. So right now it's a lovely short. It is rejecting a little bit at the moment. There's no US dollar news forecast today. However, obviously Trump could come out this afternoon. Remember what he said yesterday. Now's a good time to buy shares. So he could come out and do something like drop the tariffs, like saying 80% would be good. He could come out this afternoon and say, Besant's just got a deal at 80%. Maybe we can try and go lower. And that's going to rally that US dollar dramatically and rally that stock market dramatically, isn't it? So at the minute, market is waiting for some catalyst. There is no catalyst at the moment unless Trump says something. So I assume it's a short. However, obviously this is the origin of the trade moves. So if that is undone, that's where we're going back to. There's potential a lot of upside in the US dollar, but we need something. There's no catalyst at the moment to drive the US dollar. So it'll stay where it is. There we go. We're off again. Absolutely no direction in the market today. Suspected spam. Probably my broker. Not my broker, probably a broker. When it's suspected spam, 9 times out of 10, it's a broker trying to sign me up. What about your ORB3 quant analyzer back tests? Are you up for a brief check? What do you mean? I don't think I've got them. You can check. I don't really want to go through quant analyzer checks in here. It will take too long. And anyway, I haven't done any with ORB 3.1 either. So it's on my to-do list. Always do your own testing. Never rely on anyone else's testing. Do it yourself. Even if in any testing that I do in here, if I do a back test in here, and say, here's the settings exactly. And it's happened many times. You go and do the testing on your data, you'll get a different result. So test your data, verify your data. What's your opinion on measured moves for targets? Been watching Al Brooks? Yeah. Yeah, measured moves is good. The only thing I would say with measured moves is they will only work when the market is in what you call a sort of stable environment. So Fibonacci extensions, 181 Fibonacci extension, for example, is very reliable. So if you're going to get a trend pullback continuation, very reliable. Looking at previous movement, I mean, you can't, this is the trouble, you can't actually look at any chart at the moment. Let's go back to another kind of area. So if you look at a measured move up, for example, when you get a pullback, whenever you get a breakout or a trend continuation, look at the previous one for a clue as to how long the second one will last. Yeah, so there you go. That's a great example. Virtually the same. Then we pull back and we put in another leg. Now that one was longer, dependent on how you measure it. So you could measure that, in which case it's a little bit shorter. You could measure that, in which case it's virtually the same again. So this is the kind of like the BTMM, Steve Malraux, the 3 push. So the 3 push cycle, which is great sometimes, and other times it's absolute rubbish. But yeah, measured moves are very, very good. Pullbacks, Fibonacci. In this case, for example, we had a push, pullback, flag, push, proper pullback, 50%, push, flag. But if you look at that move, we got a 38 retracement and a 50% retracement on it, on that leg. Yeah, so the trouble I found when I started looking at harmonics, which is basically Al Brooks, Elliott wave, Fibonacci, it's all kind of all based around the same thing. Harmonics is advanced versions of that. The trouble with it is you can always fit price to a harmonic pattern. So like I've just done there, I didn't measure that exact, but yeah, I mean, if you look at that distance from there to there, and then look at the distance from there to there, yeah, it's virtually the same, almost identical. But then go back on another time period and try and do the same thing, and you won't be able to. So I always found it very hit and miss. Sometimes it works, sometimes it's utter rubbish, and it's absolutely no use whatsoever. There we go, look. Brilliant. But the problem with this type of analysis is, how do you get in? So with this type of move, most people won't take a long without a pullback. That's not a pullback. That's an accumulation. So you take a breakout trade of the accumulation after the first leg, which gets you in there. That becomes your target. Yeah. But everything I do is based on ADR and AWR. Yeah. So this is your average weekly ranges. If you measure how long these moves took, 1, 2, 3, 4 days, 1, 2, 3 days in that case, 2 and a bit, 2 days really, 1, 2 stroke 3 days there. It's roughly an average weekly range, you'll find that is. So AWR, if you wait for something to push one average weekly range, yeah, then watch what happens, either flag, a pullback, or just an accumulation, and then take a breakout of where you hit AWR high. So as an example, we've got an AWR on, let's look at the pound US dollar. Might as well look at the pound US dollar. So your weekly range hit is Monday, Tuesday, Wednesday, Thursday, Friday. There. Okay. So when that signaled, you would have taken a breakout of that potentially to get into a long, or you're sitting in there waiting for a breakout. So you can have a pending order sitting there, for example. Sorry, this is a 4-hour chart. Let's rewind. I did this morning. Exactly that this morning. I was looking at the wrong time frame. Right, 1, 2, 3, 4, 5. So Thursday, Wednesday, Monday. Right, so there's your weekly high. So that's your weekly low. So basically, take a break of that, measure that, and expand that down. That would be your target to the downside. But how you get into this, so this is a breakout underway, obviously, at the moment. Look, so that is your move. So if you get in here and measure down from there, roughly the same distance, you're going to hit this propulsion gap. Yeah. So you've got really good confluence there of a measured move. That was last week. That was the week move before. Very similar sized move there. Yeah. So extrapolate that into the future, and that is where you're likely to go. I prefer to use propulsion targets because I know they're going to get filled, because that's what happens with propulsion targets. Look, they always get filled, virtually always, not always. But so yeah, but how you get into it is the difficult thing. So if you're going to get in on a pullback, now you're going to short it here, add size here, and hold it to there. No right or wrong way of getting into the market. It's just another way. That's a really good rejection in propulsion there. Look, got a lovely shooting star going in. Take a break of the low of that shooting star, and then add some more next week when you break that low, and then hold it. Good trade if it works. Just got to manage your risk around it. Afternoon blue trader under rain clouds. It's lovely and sunny here. We like. Okay, we're pulling back inside range at the moment. Looks like I'm going to stop out on the S&P potentially. Might not do. Okay, so we're looking for this initial move from the open to hold short. So this is a pullback leg, hopefully. And the NASDAQ 30-minute range is in. So there's your 30-minute range high-low. That's your initial TPO. So we'll take a break, long or short of that. What a choppy mess today is. Exactly the same this morning. There's just no interest in this market at all at the minute. With measured moves, is it okay to think like this is a potential, but you're targeting more like 30 to 40% of your potential moves? If you're going to use measured moves as your strategy, you should measure your moves, and that it's like the you will have heard on many courses over the years, I'm sure. Set and forget. Yeah. So enter, set your stop loss, set your target, walk away. Don't look at it, don't touch it, don't adjust it, because that is your edge. Your edge is that you enter here, you have a stop loss that size, and your target is X. If you start saying, I'm only going to target 30 to 40% of that move, your edge is reduced. So it depends if the edge of the strategy is the measured moves get hit X% of the time, which it will be. So, you've got to assume that when you get in from that low, I mean, this is the thing. That's not strictly true what I drew there, because if you look at that move there and that move there, if this is going to repeat itself, your entry is going to be here on a 71.9 pullback, which means that your measured move will end here. So, and this is why in trend trading, a lot of people will take partial profits and then break even and then get stopped out, because that's normally what happens in market structure, isn't it? We come back and we retest. So if you get in here, that would be your entry. You'd have to pick a pullback level to get in, but the move, you're going to use that and that as your target. But if you target a percentage of it, 60%, for example, that's going to be your double bottom. So you're basically using the double bottom as your target in the assumption that we're just going to form a range. There's no right or wrong in anything. I've tested virtually everything. I've done every course. I've looked at every strategy. I've looked at all the biggest players that have ever been and looked at all their strategies. Every single one of them is woolly. Which is why you can make it always work. But when you actually trade it, the thing that makes it work is you, not the strategy, because you will see something happening, and it's a combination of things put together. There's no Elliott wave trader I know that is a pure Elliott wave trader. There's no one that trades purely anything. You trade what you see. So you can base all sorts of theories on everything. I like propulsion gaps because I like the regularity of them. This market at the moment is obviously not normal, but you know, the vast majority of the time, propulsion gaps get filled. All these old propulsion gaps here are all filled. So what does that tell you? Out of all the propulsion gaps we've got on this chart, there's 1, 2 that haven't been filled. So in theory, we should at least do that, if not that. Yeah. But if you want to be safe, do that. If you want to be aggressive, do that. If you want to be super aggressive, hold it short for the next 2 weeks and we'll come back down to here. But if you're trading measured movement, you are setting yourself a maximum. And the best trades are the ones you let run. Yeah. So if you look at some of the entries I've had and the exits I've had this week. Yeah. In, out, missed all that. In, out, missed all that. Why did I miss all of that? Because I am targeting a measurement, ADR. When it moves 1 ADR, I close it, which means I'm going to miss whatever happens afterwards. Now, if that happens, I go, I was right. If that happens, I was wrong. Doesn't matter. I was right. I made money. I made money. I'm not interested in getting 100% of the move. But when you've got a propulsion gap target to the downside here, here, and here, yeah, look at all these previous propulsion gaps, all filled. That tells you that there's a high probability of filling that, a quite high probability of filling that, not quite as high a probability of filling that, but that one should be pretty much nailed in, shouldn't it? We're going to fill that because it's unusual for you to leave multiple propulsion gaps behind unless there is something catastrophic happening in the market, like a Trump move. And if that happens, these are going to become orphaned. So I prefer to use areas that price has moved from because that's where the bank's inefficiencies are, and the banks will want to complete unfinished business. If you target a measurement, you will get your measurement, but you can see where it's likely to go. So using the support resistance propulsion indicator gives you much better targets. So if you get into a measured move trade because you've seen something happen, you've seen a pullback, you've seen something happen, you're seeing a pullback, you're assuming that market structure is going to continue to the downside. That is where you're expecting it to go if we keep doing the same sort of movement. But you should be asking yourself, we're doing this move, why? Where are we heading? If there's a whacking gate propulsion gap here, what's the point in getting out there? It's obviously on its way back to fill the inefficiencies in that propulsion gap. So target the propulsion gap. But your scariness, if you like, gets the better of you, doesn't it? We have fear and greed. The fear will always win over greed because we're more worried about losing money than we are about making money. It's human nature. It's the way it goes. You take things off too early, always. No one's ever complained to me, ever, oh, I leave stuff on for such a long time and make so much money. Everybody's always like, I always get out too soon. No one's ever turned around to me and say, I get out too late. I've gone too far. I went way beyond my target. No one's ever said that, ever. In 20 years, no one's ever said to me, I make so much money because I just leave stuff far too long. It's like letting a pan boil over. No one's ever said that. You get out too soon. And Elliott wave and sort of measured movement stuff is always good. Al Brooks stuff, you know, Fibonacci analysis is always good for giving you somewhere to go, but it's never going to be all the way. I was always taught to take a percentage of the move. So if you see a trend, if you see a trend as a trend trader, you're trying to get on that trend that you can see running. Your job is not to take the whole thing. Yeah. Everybody wants to get out here. Your job is not to get in here. It's not to get out there. It's to identify there is a trend and take a bit out the middle of it, because that's easy. Getting in here and getting out here is virtually impossible because it's random. But taking portion out of the middle or multiple cuts out the middle of it is easy to do. And that's where these movements come in, harmonic patterns and all that sort of stuff. It's very, very useful. If you are that type of trader and you want to be that type of trader, you know, it's not for everybody because it involves a lot of analysis. I've tried to automate Elliott wave. I've tried to automate harmonics. I built a harmonic EA years ago. There's quite a lot of them out there already. I've built Fibonacci pullback thing. I've built everything. And nothing works automated because the market never does the same thing enough. And it never does it as they teach you in the textbook either. It will never be exactly as it is in that book. Yeah. We went through 3-bar reversals recently in the members streams. They never look exactly like the ones I showed you. I showed everybody loads of different variations of 3-bar reversals. These are all 3-bar reversal patterns. Yeah, that's a 3-bar reversal. That's a 3-bar reversal. That's a 3-bar reversal. That's not. That's not. But none of them look the same. Yeah, but the one they'll show you in the textbook is that one. Because it is a nice big downward move with less than a 40% wick, a downside wick rejection, which is a bullish candle with a double bottom, and a strong push back in the other direction that closes above the high of that candle. Textbook. You might find one of those every now and again, or that one, where we got the wick down below both of those lows. Textbook. Yeah, but going through this document and look at all the 3-bar reversals in it, 2 of them look like the textbook. The rest of them are all reversal patterns, but they don't look the same. And this is what you'll find with all measured move, Elliott wave, price action, all random. Fibonacci never pulls back to exactly 50%, but in the textbooks, they'll show you that exactly. There's always one example. I can show you ADRs. There aren't any today. Oh, there is. You're a cat. I can show you examples of ADR. This one probably won't be. No. Where it actually hits to the pip. So basically it pushes up into ADR. The wick of the candle hits the ADR line. It pulls back down and makes a shooting star at the high, exactly at ADR. That's the screenshot I take to show you what price reaction at ADR looks like. Never happens like that. It happens like this. Nothing's exact. We're inside bars on the opening range. Not going anywhere today, are we? Peter, with measured moves, okay, yeah, answer that one. Could measured moves be used as additional confluence for a reversal at the beginning of leg 2? Yeah. So, yeah, I think I've probably already covered that, haven't I? But market structure is a combination of measured. Trying to find a trend in anything at the moment is like pulling teeth, but is it? So there's your initial push. There's your retracement to 61.8. It went below it. It was a bit above it, a bit above it. Yeah, it's roughly 61.8 as a retracement, isn't it? So, but what's the confluence here? Yeah, that move there is pulling back to 61.8 in confluence with the previous pullback at propulsion. So this propulsion move here was added to multiple times. So they added more size, and we are pulling back by a measured move of 61.8 into previous propulsion buys. Yeah. So that's where confluence works. This leg here pulled back to just under 50%. But what's the confluence? take it from there. Yep. To the pip, 50%. 3-bar reversal at resistance. Yeah. So that was the previous leg, 61.8 pullback. Second leg, 50% pullback into previous high. Off we go. We haven't managed to go anywhere, but in the textbook, it will go doing, 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 doing. We'll be off beautifully. So the next 3 days, it will push exactly the same distance. It will pull back either 50 or 61.8 because that's what it did last time. And it will just show you a perfect market structure. What's actually happened this time is that one took 4 days with a 2-day pullback. That one took a day and a half with a day and a half pullback. And now we've been sitting around for 3 days. This is still market structure. You should be buying it. And we are going to go long if that is going to continue in a trend. Where's it going to continue long to? Easiest way to do that. Never going to be able to grab that, am I? It's far too much on the chart. So that's your pullback. That's your double bottom at resistance. So that pullback there is the origin of the move. That's the size of the move that we've got at the moment. So that's your target, 200% of ADR. So wherever you get in, 200% of ADR, if we are going to put in the same distance of movement every time, not quite exact, but that's where you're going. You put an extension on Fibonacci, it will give you roughly 80% more than the move, which is a Fibonacci 181 extension down here. Mine's upside down, but so there you go. Measured moves. They are very, very good in a trend. When the market is trending normally and behaving like it has done in the past. But this is a Trump presidency with 3 wars potentially happening around the world. AI taking people's jobs. This is a different world. So whether market structure continues like this, market structure and smooth trends happen in a normalized market condition where banks and institutions are just making money. There's nothing unusual going on. When you've got nutty things going on like this, you are not going to find that you're going to pull back exactly to levels. It's just not going to happen because there's too much volatility around when you get to price points. However, if they're re-adding, they will take profit on 50 to 60% of the move. But in this case, they didn't because we had a new news event come in which undid that. And it just so happened that that news event pulled back 50% of the initial leg. Look. Coincidence? I don't know. By design? Possibly. They took off half the move they put in there, but they didn't really make money on that. Most of them got killed because it just went too fast. So where's the unfinished business at the moment? Here. Where are we heading to? There. When we finished that business, where are we going? Here. Why? Because that's what it does all the time. Trouble is you can't time it. So if you were saying, oh, look at the size of that move, I'm targeting that, you're in it for 3 weeks, 3.5 weeks you've been in this now, trying to get back there. But it is, and it will, because there is business to be done. And there's business to be done there. There's business to be done here as well. And there's business to be done here as well. So when it gets back to there, it may well come up to here, but it may not because of this. We don't know. But that's all you, this is why I have this indicator on the chart. This is one of the most powerful indicators out there because it's not driven by market movement. Every indicator you see on your chart lags price. This shows you where price is going. Yeah, big difference. Pound CAD ADR, AWR, sorry. Canadian dollar getting hammered off the back of those unemployment numbers. which means, I was just going to say, we're likely getting some movement in the stocks. So short all three at the moment. Slightly over leveraged. But yeah, so the support resistance propulsion indicator shows you, this is why I have this, this is the indicator that everybody should have, because what it's doing is it's showing you where price has been. What does price do all the time? Go to where it's been. Why does it go to where it's been? Because that's what it does. That's where it can conduct business. So we had business here where there was a large volume of buyers coming into the market, and they continued to buy for weeks. Yeah. Until a large volume of sellers entered the market. They added more size into their sell orders, which meant that the buyers couldn't break that level. So we end up heading back to where we previously bought it, because we can't do business above that level. We couldn't do business below this level. So you've got this area where we're going to trade now. Yeah. So while we're happy and content in balance to be trading in these areas, you will go and trade at that level or at the levels below. That's all you will do. So if you know where the banks are trading, which is indicated by large movements in the market like this, you know that you're going to get back there, because there are banks and institutions caught offside in the volume of the movement who have orders in the opposite direction. They will drive price back there to finish business. It's called unfinished business for a reason. That's all it does. And it moves from price points. So when you get weekly highs and weekly lows and monthly highs and monthly lows, you will get reactions at them. If they are where a propulsion gap is formed, you've got a propulsion move, which is a strong amount of buyers, followed by them re-adding to their orders. So when you get back to that area, you're going to get a bounce. Those are the easiest trades to take. Aussie dollar CAD, this Canadian dollar is getting hammered on £1 CAD. We're off over ADR. Pound US dollar. US dollar's moving. I think we got some news. Decision on US trade talks based on full assessment. No, not that. There is an interest from the US side to find a solution. Okay. There's some talk going on, but I think this is just normal market movement at the minute. Yeah, there you go. Measured moves. Morning, Mayor. Have you managed to make a progress with 3-bar reversal indicator? No, not an indicator, an EA it was. I have, and I've just shut it down. I haven't made any more progress, no. Excuse me. But it's working. Where's my terminal? My computer's on a real go slow today. Are you really taking that long to load? That's not loaded, is it? So the EA basically is the detection algorithms are all in place. There we go. So there's your 3-bar reversal. Short. So yeah, it's the detections in place. Haven't had a chance to do any real testing with it yet. And there's lots of things I'm finding testing that and what we've been talking about today, measured movement, is something that's very useful for this. Just looking at risk reward on it, what I'm first step in this is to analyze how often we get 1R, 2R, 3R, 4R, 5R from a 3-bar reversal, and whether the 3-bar reversal should be high of day, low of day, or whether it doesn't matter, and all sorts of stuff like that. So the EA is kind of there from a logic perspective, but it needs. I mean, it's an analysis tool. It's not an EA to make money. It's to analyze what happens on 3-bar reversals. This on the DAX. Oh, this is a 15-minute chart. So, yeah, I mean, obviously, time frame is going to come into it quite a lot, but the purpose of it is to get data out as to what works and what doesn't, which is why we've got so many inputs in there. So it's an analysis tool, and there's a lot of analysis and backtests I want to run with it, but I need to code in break even and trailing stop mechanisms into it. And apart from that, I think it's pretty much there. So it's on the list, but I got sidetracked by a new project today, as I do, which was to do with, again, it's another analysis tool, to do with daily. Analyzing stock index percentage movements. So similar to ADR, but using average movement up down and maximum movement up down over different ADR periods. So I've got this EA that I've built this morning, which basically takes a starting time, which is usually roughly the open, and it plots the 3-day average, 10-day average, and 60-day average, as well as the 3-day, 10-day, and 60-day maximum ranges it's achieved from the open. So up there is your 60-day maximum. So the maximum upside movement we've had on the DAX in the last 60 days has been 1.65% gain. And the maximum downside movement we've had has been 2.3% gain. Trump. So it's a mean reversion tool, which I'm building to complement the ORB. So with ORB, what we tend to find is you either get that violent open and we run for the day, we trend, or we don't, and we just sit around and it doesn't really go anywhere. At some point in the day, though, you will usually move roughly an average movement. If you're going to get one of those types of days, I'm looking to mean revert those moves, basically. So it's kind of to sit alongside ORB. And I got the idea from a friend who I've known for years, who's a 1 minute scalpy guy. And he uses a kind of pivoty strategy. But it works a little bit like this. There you go. So there's a prime example. Yeah. So that is the 3, 10, and 60-day average low there, achieved today on that day. And it bounced out. Why? Because on average, over the last 3, 10, and 60 days, that's all it ever does. So what you do is you wait for it to do what it does on average, and you buy it. And the same as if it gets up here. So those three are fairly close together. So if you get your averages fairly close together, it means that we're contracting back to normal ranges. So the 60-day gives you the big, wide, multi-month view of how big this thing moves. The 20 gives you, or the 10 gives you the last 2 to 4 weeks of movement. And the 3 gives you what we're doing at the moment. So if at the moment we're in line with what we tend to do typically, these 3 will be contracted together. If they contract together, you trade from them. Really good strategy, in theory. So I'm just testing this at the moment. So I built this today to, it's the start of it, but to backtest that theory, which, to be honest, see, that's not great because the range, you saw the ranges there spread out a bit. But yeah, so I've kind of got a little bit sidetracked. Days like this, not going to be good. Yeah, so we're way beyond the maximums. So, you know, this is the biggest move it's had in weeks going in right now. If it continues up, it'll be a biggest move in months. But yeah, so these are news days. So we can filter them out with these lines. So anyway, another project. This is my life. I get sidetracked into other things and I never finish anything off. I'm getting some very strange readings on my RSI dashboard. Every time I turn it on, 1 or 2 instruments RSI readings are clearly incorrect. Broker issue or something else. Correct. It's one of them. Oh, you get. I'm taking a partial on the S&P on the close of the next candle. I'm not having that. I'm straight out. It literally hit my partial close. Uh, 130. Sorry, I need to watch this a minute. Not paying attention. There you go. There's the double bottom I said about with the whipsaw off the news. So this could well be range low today. It's quite a strong drop though. So if we do break and hold below that low, right? Okay, so we were just talking about propulsion gaps, yeah. So this candle here is that accumulation break, right? That's the propulsion move. Look at the price action. Bang, rebought. Bang, rebought. Bang. Yeah, this isn't coincidental. This is where the buyers, banks and institutions are buying again and again and again. This is where the banks bought again and again and again and again and again. Yeah, this is why we use propulsion gaps as targets, because there is unfinished business there. Yeah, there is unfinished business. Can't see it, but it's there. Here. Yeah. So if we get here, what are we expecting? Yeah. So if you are short, where do you get out? There. So just going to close that partial on the S&P. 6 seconds. Okay, partials in. Break even stop. So that's all locked in. Nice sell off today. Dow. So we've broken through that level. So next target to the downside on the Dow here. That's the propulsion target. So potentially we get to there, but I'm going to take a partial on this as well. Just an end of week sell off by the looks of things. I'm just going to move that up because I want to get a partial on that anyway, just to recover losses on the morning, just in case bounce out of that level. Yeah, so sorry, WDS, if you're getting some odd readings on your RSI dash, check that you've got data. So obviously you know that these are closed candles, not open. So you're never going to get the same reading as RSI. So the RSI 21 on the pound CAD is currently 67.87. Pound CAD RSI is 64.07. So 67.87, 64.07. This is the closed candle reading, not the live candle reading. We are looking for what happened at that close of that candle. Yeah. So they are going to be different, which you know because you read the manual. But you obviously didn't, because I didn't either. We're men. We don't read manuals. I don't even know if you're a man or a woman. I'm assuming here, but we don't read manuals. No one reads manuals. But yeah, this works on candle close. So this only updates when the candle closes. So your readings are going to be different. If they're wildly out, I've no idea, because this is literally reading from your chart. So they can't be wildly out, but they will be different to the actual live reading, obviously. So. Testing the PTEA with 3-bar reversals on M15, fewer entries but quality ones. Yeah. I mean, you will get quality entries because the 3-bar reversal pattern is, I mean, that's a terrible one, but it's not terrible, but, you know, a 3-bar reversal is an exhaustion correction. Is the sellers taking control from the buyers. So it's a very, very, very strong reversal pattern, but it has to happen at the high or at resistance to be valid. If you see a 3-bar reversal like that, I mean, that's not, because it's not a bull candle really, but if that was like that, that would be a 3-bar reversal, which in this case would have worked, but it's not any good because you're bang in the middle of today's range. There is no reason for that to work. There is a reason for that to work because price has pushed out, tried to find sellers at the highs, not found any, so the buyers have flipped short. That's why it works. Same here. We've pushed up strongly over there into what? Propulsion gap. And we've broken that high and we haven't found any sellers. So buyers cannot continue the move. Therefore, the sellers take over and the buyers become sellers and being pulled back down into a 61.8 retracement where we buy it back up again. As we were just talking. Now we're on a measured move up, which will be exhausting shortly and we'll come back down a percentage. Where to? Probably there. All the same stuff over and over and over again. The market doesn't do anything different to what it's done in the past. This is the target because that's where the unfinished business was. That's now the target because that's where the unfinished business is. We will be coming back there. We may come back here. We may not. We're struggling at that. So this is the Globex low. This is lower day. So we're struggling at lower day. If we're going to go into rotation today, obviously we will buy the low of the day. So NASDAQ partial is also going in 5, 4, 3, 2, 1. Done. So 173 banked, 540 runner. So recovered the loss from this morning. This is a very strong sell-off today. So I might just hold. I might close some of this out and leave some of it running because obviously they're all the same instrument pretty much at the moment. I'm going to close the Dow completely and cancel the pending. At least then I've got a little bit of banked. This is all guaranteed, locked in, can't lose it. So these runners, obviously, if we're going to do ADR today, ADR is all the way down here. Obviously that's ADR from my entry. That's one ADR of movement from my entry, not ADR from the high. But it's not far off, is it? 125 ADR, probably that is, which is these previous lows here. So we're either going to hit that and bounce, or we're going to bounce directly from where we are. Potentially, if we break this level, we'll be off to the downsides. Welcome to the member streams, Angela Tan. Welcome aboard. I don't know if you're a new member or you're a recurring member, because I can't remember what colour. Dark blue's new, isn't it? I think. Can't remember. Anyway, welcome aboard. Or welcome aboard again, whichever. Go and look at all the content on the website. On the website, not on the website, on the streams. If you're an existing member, you already know this, but all the past streams are in the membership section. Go back to the beginning. This is all about strategy development, reading price action, everything you need to know. Everything that's worth knowing, basically. I know a lot of stuff that's not worth knowing as well, by the way. Don't just know everything that's worth knowing. I know a lot of stuff that isn't worth knowing, and I'm trying to forget it. We know you keep yourself busy. Yes, I know. I've got 3 things running at the moment. 3 afternoon plowmen. Side quest, Lee, our favourite mentor. Side quest. I've got so many side quests going. I've got 3 main research and development projects going at the moment. 3-bar reversal, the breakout strategy that I was running when Trump went crazy, which I'm still running, but that's got more development work to do on it. And now this new project, which I started today because I was chatting for quite a long time on Telegram to one of the guys that I was in a mentorship group with years ago. And he's just sent me off down this rabbit hole today because he gave me this strategy variation that he's trading, basically. And I said, I'm trading opening range breaks at the moment. And he was like, I do that, but I do this as well. So he sent me on this rabbit hole doing the opposite. And this is exactly what I've been looking for, is a reliable mean reversion strategy to mix with this. Let's look at, actually, that'd be a really good, this will be a good sort of analysis to do on the US 30 today, because what this strategy will do is it will be looking after this break to long and hold for the rest of the day. So the idea being is, if we get a lovely break, we make money with the opening range breakout EA. When we've made money with the opening range breakout EA, I haven't got a name for it yet. I've called it the percentage range trader. It's a working name. That will take over and go, well, we're long it now because we've moved down on average what we normally do. So the ORB will be getting out as this gets in. That's the idea. So if you get a day where you whipsaw to death at the open because the market can't do anything, and then it suddenly decides to go late of the day, that will hopefully recover the losses from this morning's chop. So that's the idea of pairing the two, pairing a breakout strategy with a mean reversion strategy. It doesn't matter what the market does. If it does one of them, you're likely to make money. So it's pairing the two together. So I was just going to quickly stick this on the Dow. Just see what the levels are. What did I call it? Percentage range state. I don't even know what I've called it. Is that going to work? Adding it retrospectively? I don't know. Let's try it. Haven't tested this yet on US. Set not to take trades. That's fine. Yes. Okay. Right. So there we go. On average, that is where I would expect to get to today on average. Yeah. So over the last, that's probably 60, isn't it? Yeah. So that's your 60-day down. 1.2% is the average downward movement over the last 60 days. Over the last 10 and 3 days, however, we've only moved down on average 0.6%. So if we're going to have a normal average day that we've had over the last couple of weeks today, that really is roughly what we'll do. We could go a little bit beyond it because it's an average. So an average obviously could mean there or there, and that's the average of the two. Yeah. So it's roughly somewhere around there is what we tend to get to. So ORB is currently broken short. If we continue down, ORB will get out at some point on a trailing stop after this triggers in a mean reversion. That's the idea behind pairing the strategies. This is your 60-day, that's your 10-day max down, which is 1.77%. This is your Trump craziness, 5.4% down. Do you remember we had that 5.4% drop in one day, and then he had a 6.5% rally and went, do you know what? I made that rally happen. Up here. Oh, 10.4%, sorry. So market rallied 10.4%. And he went, I did that. We went, we know you did that, Trump. You manipulated the market. You told all your mates to buy the stock market, and then you paused the tariffs to pump the stock market. We know exactly what you did. But anyway, so this plots this is never going to be normal, is it? This is something we've never seen before. But normally what it would do is it would say, over the last X period, that's the maximum we've ever got to. But on average, that is what we get to maximum, and that is what we get to maximum the majority of the time. So think of it a little bit like ADR. It's virtually the same as ADR, but it uses percentage movement because stocks and futures tend to move in percentages rather than average daily ranges, but really it's the same thing. So what this is doing is plotting different ADRs, if you like, or percentage range movements on the chart so that you can get an idea roughly for where we're going to go. But this works from time. So if I change this to 2014 30, that is the open. Yeah, you see those lines change. So what they're doing is they are saying, right, how far do we normally move from the open? So you can exclude Globex, exclude pre-market movement, and say, right, from the open until the close, what is our averages? Yeah, so it's basically pivot points, if you like. But the strategy that he's running is a buy and hold strategy, basically. So if it doesn't get here or here, there's no trade. So we're literally going to go, right, we'll get in down here and we'll hold it for the rest of the day. If we get in down here and we've only got an hour left, we only get an hour's worth of drawdown or an hour's worth of pumping, don't we? So I'm not going to be able to open this spreadsheet now, am I? But if I run this in the strategy tester quickly, let me just close that. I'll show you what the analysis, this gives you a little bit of an insight into what I do from an analysis perspective. Let me just set that up correctly in there. This is running on the DAX. So I'm going half an hour before DAX open, basically until end of day. So including the New York session. Off. So I'll show you what this spits out, and this is how I do my analysis. So whenever I'm building strategies or testing strategies, I like to have data visually to look at. So what I do, which if you're a member, you'll know because I cover it in the members streams, but visual backtesting is stage one, trying to find an edge visually. So if you look at a chart, you can go, right, well, what I want to do is roughly whenever it's dipping, I want to buy it, or whenever it's breaking out, I want to break out and I want to hold it until a level or whatever. So you visually formulate a plan. Then I build an EA to backtest it. But when I build my EAs, which the Position Trader EA has in it, it has an export facility. What that allows me to do is get all the data that's valuable for the strategy out into a spreadsheet that I can then do further analysis on. So that has just run from January to May this year. And it's created this spreadsheet, which gives me all this data, which is lovely. So basically what I can do is every day, this is, I haven't set it to take any trades. That was useful. But what it does is it basically tells me whether or not there was a buy or a sell triggered and at which level that buy or sell was triggered. It will tell me all the other information about those trades, how much sell drawdown was taken, what the prices exit were, the actual result percentage wise, etc. It gives me the total days range, the highs, the lows, the maximum upward movement, the maximum downward movement. So I can put all this together in a data model and say, right, on average, if we took a trade here and we only went for this much distance, we would hit it X% of the time, which is an edge. If there is an obvious max drawdown in here that you can look at and go, right, so if I just do that, it gives me an average. So the average is 0.89. So over that entire 5-month period, the maximum downward movement we had on average was 0.89%. So just under 1%. So that tells you basically it's unlikely you're going to go over 1% most of the time. So if you want to set a stop loss on it, when you pull down and you take your long, if you set your stop loss at 0.89%, on average, that won't get hit because that will get hit because it's an average, it's in the middle. So a lot of the time you won't hit it. Some of the time you will get to it. So if you put it just beyond that, you're going to have less stop outs than you would if you put it close. So it gives you all this information that you can use to target the maximum upside movement because it's an index, I'd expect it to be higher. Yeah, 0.94 is higher than the average downward movement because stock indices go up. So this gives you an idea of what you can target. So some of these days, like there, for example, we get a 7% up day, 8% up day. So you get these massive days which are outliers. So you can filter those out and go, that's rubbish. We're not going to do that. But most of the time, we will get somewhere around 7.5 to 1 to 1.25%. So it just gives you all the statistics so you know exactly what to target. And that's basically how you formulate the strategy. So if I put that to actually trade some of these, it was set to trade some. Oh, this is the development version, which I've obviously broken. The other version does take trades. Yeah, so that's not going to work, is it? Oh, it's because I set it on daily. Oh, yeah, that's because I did that, isn't it? Okay. That will work. But anyway, so yeah, that's one of the 3 projects I've got going at the moment. So we are pushing down again. Dow still continuing to the downside. So we're just basically little flag break there. So watch that propulsion gap to the downside on the Dow. I'm already out of the Dow, aren't I? So NASDAQ, same thing. We're just flagging at the moment. Just rerunning that. I'm interested to see what data that spits out. I haven't tested it. This is what development's all about. Spending the entire day coding, testing, and then analyzing, and then throwing away most of the time. There we go. So we're taking some trades now. Look. So this is set to long only at the moment in this test. So the period 1 average to the downside was taken. We entered at that price. The maximum drawdown it took was 0.16%, ended up with 0.5% in profit. The next day it took a average period 2 down. So it exceeded the second one. Yeah, so remember if they're close together, it's good. So it exceeded the first one, it exceeded the second one. It took 13%, 0.13% drawdown, 0.13, not 13% drawdown. That would be huge. But it actually closed at a loss. So it didn't come out with a profit, that one. That one took a trade, went 0.1% into drawdown, ended up making 0.28 on the day. So that's your return on drawdown. So you drew down by 0.1, you made 0.28. Yeah. So all this works with analysis so that I can go, right, what's the maximum drawdown I've taken out of all these trades? And if you get outliers like this, 0.49 and 1.57 and 1.93, you can set obvious levels where I don't want to go into 1.93% drawdown on a single trade. So I would look at what is the average drawdown that we take on this, somewhere around about 0.32. So I'd say, right, well, let's go for a 0.5. So if we drop by 0.5% after I've got in, bearing in mind we've already dropped by an average percentage, it's obviously a parabolic down day. So I want to get out at 0.5%. So it's this data, this is why this is exported, all this data. It shows you what the extremes are. You can do all of this in Quant Analyzer as well, as Mumo mentioned earlier. Obviously, if you run a back test in the strategy tester, you get all the results of the trades in here. So you can obviously work out what your maximum losses are and say, right, on some days I took a $74 loss there, for example, a $26 loss there. But most of the losses are 8, 7, 12, 16, 16, 23. So what you could say is there's a couple of outliers there, 70, a 21, a 22, a 29, which are way worse. So let's set a maximum stop of X%, which will cut those and minimize those losses down to whatever. So you can do very much the same thing in Quant Analyzer, but I'd prefer just to export it and then I don't have to stick it all in there. Anyway, there you go. Just insight into my life. I spend my life doing. Hopefully this is still a flag break, but it might be pulling back. So we'll see. Speaking of side quests, how's 007 doing? Still in the red? That's the breakout strategy. I don't know because it's not running at the moment. It started to lose because obviously the ADRs changed dramatically, and that was its Achilles heel. So it started to hemorrhage quite badly on a day-by-day basis. So I've turned it off for the moment. It's made its money. It's more than paid for itself. Well, I say paid for itself. It didn't take me long to develop it. So, but yeah, it made a very nice profit, but it started to hemorrhage, and it's because ADRs contracted. So, you know, these weeks here, it was killing it, and then it started to die because the ADRs weren't contracting fast enough. Which I think I've already said all this anyway, but it needs to work on ATR, not ADR. So I'm recoding it again. It's one of the list to work on ATR, so that it's using a very recent price action, and it will obviously start after the open. So, yeah, it's okay, but it needs work, more work. This is the trouble. When it's only you only have the time that you've got to develop stuff. So things tend to stop. That ADR is starting to play out on pound CAD. Reversal alert's just about to go in. Maybe. I might take this Euro Swiss off. I am already exposed on the Swiss to the downside against the yen. So if the Swiss does drop, my Swiss yen will play out. What I'm worried about here is obviously we're in a downtrend. We have just pushed up into there. You know, that propulsion gap is probably going to get hit, but if it doesn't, and we break those lows, I'm just going to be stuck in it for weeks, and I don't really want to be, because the Swiss yen's on as well, and that'll probably go the same way. You know what I might do? I might just put a stop on it. I'm just going to put a break-even stop on it just to protect it. I won't bother taking it. Right, that's all I got for you this afternoon. Not a lot else really going on. So I will be back on Monday. Just bear in mind, news-wise, obviously, we got Mr. Trump. It's possible that US and China agree on mutual suspension of customs duties for the duration of talks. Complete backpedal. That would, yeah, I mean, be careful with the stock market this afternoon. If he does announce something like that, we're going to fly. So remember what he said yesterday. Now is a good time to be buying stocks. Yeah, exactly what he said last time he pumped it by 10%. So just be aware, obviously, you could have at any time him coming out and saying, we're off. Blast heard in Indian Kashmir, so they're all kicking off again. But just keep your eyes peeled on the news, obviously, just in case. Next week, we haven't got masses of news. We've got CPI for the US, which is obviously very important. Apart from that, it's kind of PPI week. So there's not actually an awful lot of news next week, which might mean another bit of a boring week, but very quiet. There's nothing happening over the weekend either. So hopefully it'll be a quiet weekend. We will see. All right, so have a good one. Anything you need, let me know. I'm just going to run these shorts. They're either going to trail and stop out, or they're going to go down and hit target, one or the other. But either way, it's an up day. Just market will decide how much up it is, but we'll see. All right, have a good one. Anything you need, let me know. Telegram, Discord. Other than that, back Monday, and I'll see you then. Have a good weekend.